Now, this idea of trust, so we've got a trust whereby the legal ownership and the beneficial ownership has been split, and indeed equity recognised beneficial ownership. We've got the two types. You've got express trusts, and then you've got implied trusts. Now, this the case in the slide here, Cook and Fountain, 1676, so not a recent case by any means. So pointed out the distinction between the two. The trusts are either going to be express, which are raised and created by the act of the parties. So the parties say to each other, we are going to create a trust. You are the trustees, you are the beneficiaries, everyone knows where they stand. And then you've got implied trusts, which, as it says here, are raised or created by an act or construction of law. Now, this is being imposed on the parties, essentially. Now, you can look at law through a constructive trust, which will have a look at somebody who's breached the law. Therefore, constructive trusts are almost like a remedy sense. Or it's by, you could say, by the act of the parties. The parties have done something which can imply a trust, where the name comes from. Some of HMRC's guidance had said, well, a purely commercial transaction or series of transactions is outside the meaning of the settlement. So anything that does have that commercial justification behind it won't fall into settlements legislation at all. Most commonly, the legislation will apply where individuals seek to divert income to members of their family or to friends. I do take exception with that word friends. The settlements legislation does not mention friends anywhere. How do you define a friend? And it's not either to members of family. The settlements legislation is spouse or minor unmarried children. I say there is other legislation in the Income Taxes Act, which is aimed at diversions of income, gifts of income, but that is not within the settlements legislation. It does not say family or friends. It's settlor or spouse, their spouse, or their minor unmarried children. However, the last bit of this statement, I think, is a pretty good bit of guidance. A good test of whether or not the legislation could apply is to consider if the same payments would be made to a person who acquired the shares of a company or share of a partnership at arm's length. This is saying, is there going to be a benevolent or commercial justification behind it? You would obviously not gift away income. You would not gift away, these income streams to someone at arm's length. So if you're doing that, and you wouldn't ordinarily do it to a complete stranger, then that's a bit of a red flag for the settlements legislation.